Good evening, and welcome to the Crypto Overnighter. I'm Nicodemus, and I will be your host as we take a look at the latest cryptocurrency news and analysis. So sit back, relax, and let's get started. And remember, none of this is financial advice. And it's 10 p.m. on Tuesday, July 11th, 2023. Welcome back to the Crypto Overnighter, where we have no sponsors, no hidden agendas, and no BS. But we do have the news, so let's talk about that. We have a bunch of stories tonight. First up, we'll be diving into the legal tussle between Grayscale and the SEC. It's a battle of the ETFs, with Grayscale arguing against the SEC's decision in a way that just might change the game. And then we'll be hopping across the pond to the UK, where crypto ATMs are under the microscope and digital securities are getting a second look. It's a story of regulation and innovation, and you don't want to miss it. From there, we're jumping off to Dubai, where BitOasis, a prominent cryptocurrency exchange, is facing some regulatory hurdles. It's a reminder of the challenges in the crypto world, even in the most crypto-friendly regions. Next, we'll be traveling to Brazil, where a blockchain developer has made some intriguing discoveries about the country's pilot CBDC. It's a tale of transparency, privacy, and the potential future of digital currencies. After that, we'll be exploring Circle CEO Jeremy Allaire's thoughts on China and stablecoins. It's a story of international finance, digital assets, and the potential for a new kind of global currency. Finally, we'll be returning stateside to delve into the controversy surrounding Promethium. That's a saga of allegations, investigations, and the ever-present tension between the crypto industry and the regulatory bodies. The crypto asset manager Grayscale is in a legal battle with the U.S. Securities Exchange Commission. The dispute is over the SEC's rejection of Grayscale's application to convert its Grayscale Bitcoin Trust into a spot Bitcoin ETF. Grayscale's lawyers have criticized the SEC for approving a leveraged Bitcoin-based exchange-traded fund, which they argue is riskier than the product Grayscale proposed. The SEC approved the leveraged ETF in late June. Grayscale's lawyers argue that the SEC's approval of a leveraged Bitcoin futures ETF, which they consider to be a high-risk version of a Bitcoin futures product, shows the SEC has no intention on correcting its discriminatory treatment of spot Bitcoin ETPs. The SEC's rejection of Grayscale's application led to the company filing a lawsuit against the regulatory agency, alleging a violation of the Administrative Procedures Act. The case was heard by the D.C. Circuit Court in March, and a ruling is expected by the end of the year. The SEC's approval of a leveraged Bitcoin ETF is seen as inconsistent by Grayscale's lawyers. They argue the SEC is treating spot Bitcoin exchange-traded products differently than Bitcoin futures ETPs. The SEC allowed the volatility shares 2x Bitcoin strategy ETF, or BitX, to begin trading, even though it's a leveraged Bitcoin futures product. The approval came after the SEC rejected Grayscale's proposal to convert its flagship fund into a spot Bitcoin ETF. The SEC argued that the futures products are harder to manipulate because they're based on the prices from the CME, which is regulated by the CFTC. However, this reasoning has not satisfied Grayscale or other asset managers, such as BlackRock and Fidelity, who have also filed for funds with the SEC. The SEC has yet to approve a spot Bitcoin ETF, citing concerns of fraud and market manipulation when assessing past applications. Before we dive into our next story, don't forget to hit that like button, follow us, and subscribe to stay updated on all things crypto. Now, let's cross the pond and see what's happening in the UK. The UK's financial watchdog has been on a mission against crypto ATMs. In May and June, they conducted inspections in collaboration with the South West Regional Organised Crime Unit and the police forces of Greater London, Bedfordshire, and Hertfordshire. The result? They shut down 26 crypto ATMs. The Financial Conduct Authority warned that the victims of scams involving these ATMs will not be protected by the government or the machine operators. Now, let's shift gears to the UK Treasury. They've started consultations on a 5-year trial for digital securities. This trial could lighten regulations for digital bonds and equities for about 5 years. The government believes that this sandbox for innovative securities based on distributed ledger technology could make markets more efficient, transparent, and resilient. They're eager to start using new rules that were signed into law just 2 weeks ago. But here's the catch. The relaxation won't apply to derivatives or unbacked crypto like Bitcoin and Ether. The officials are pointing to an evolving regulatory framework. Last year, then Finance Minister and now Prime Minister Rishi Sunak said he wanted to make the UK a crypto asset hub. He's proposed ideas on stablecoins, crypto promotions, and a digital pound potentially issued by the Bank of England. But the crypto industry thinks the ministers are just not acting fast enough compared to other jurisdictions. Editor's note, they should just be happy they're not the US. The EU's landmark Markets in Crypto Assets regulation is set to take effect next year. They've already started a pilot project to test out DLT securities trading. The UK Treasury is seeking views on its plans for a digital securities sandbox until August 22nd. So it seems like the UK is trying to balance innovation with regulation. But will that work? Only time will tell. All right, folks, we're taking a quick trip from the UK to Dubai. Let's see what's happening with BitOasis. In a surprising turn of events, BitOasis, a prominent cryptocurrency exchange, has had its conditional license suspended by Dubai's digital assets regulator, the Virtual Assets Regulatory Authority. This action comes just 3 months after the license was issued, with VARA citing that BitOasis failed to meet certain conditions within the stipulated timeframes of 30 to 60 days. This has led to a review of BitOasis and the initiation of enforcement action. BitOasis received the license in April with the understanding that it would cater to institutional and qualified investors. However, it had not yet started providing services to these investors. Despite the suspension, BitOasis assured its existing retail users that the broker-dealer services will continue without disruption. However, the company has committed to not onboarding any new clients until it has fully complied with VARA's requirements. BitOasis is actively working with VARA to fulfill the conditions and to get back on track. But now let's delve a little bit deeper. This incident is a stark reminder of the regulatory challenges that crypto exchanges face, even in the regions that are generally seen as crypto-friendly. It's a clear indication that regulatory bodies are keeping a close eye on the operations of crypto exchanges, ensuring that they adhere to set standards and conditions. For the crypto enthusiasts among us, this might seem like an overreach by authorities, but it is crucial to remember that these regulations are in place to protect the interests of investors and to maintain the integrity of the market. While this may be a setback for BitOasis, it's not the end of the road. The company's commitment to fulfilling the regulatory requirements and its assurance to existing users shows resilience. Now, let's head over to Brazil. But before we do, if you're enjoying this podcast, don't forget to give us a thumbs up and hit that subscribe button. Let's dive into the latest on Brazil's CBDC. In Brazil, a blockchain developer named Pedro Magalhães claims to have reverse engineered the source code of Brazil's pilot CBDC. He found functions in the code that would allow a central authority to freeze funds or reduce balances. The source code of the digital Brazilian Real pilot project was posted on GitHub by Brazil's central bank. However, Magalhães pointed out that the code lacks specificity about the circumstances under which the tokens can be frozen and who holds the power to execute them. On the other hand, Magalhães believes that the functions he found in the code of Brazil's pilot CBDC could be beneficial in certain situations. He suggested that Brazil's central bank would probably maintain these functions for secured loans and other financial operations based on decentralized finance protocols. However, he stressed these aspects should always be exposed in the smart contracts publicly and discussed with the population, which has not been done yet. Many in the crypto community have raised concerns that a CBDC has the potential to infringe on their financial freedom and to encroach on their privacy. Despite these concerns, Magalhães believes that a central bank digital currency may offer some benefits, such as making taxes more easily traceable and strengthening transparency in parliamentary amendments. Next up, we're heading to China. But before we do, remember to follow us on all our social media platforms to stay updated on the latest in crypto. Let's see what Circle's CEO has to say about China and stablecoins. Jeremy Allaire is the CEO of Circle. He recently suggested China should consider adopting stablecoins backed by the Chinese Yuan to internationalize its currency. He believes stablecoins could be a more effective tool for this purpose than the central bank digital currency. Allaire sees stablecoins and CBDCs as complementary, with the private sector driving innovation on the public internet. However, the Chinese government might not be open to this idea due to its strict capital controls and ban on the free convertibility of the yuan. These policies are crucial to China's economic strategy. In 2022, the first deputy managing director of the International Monetary Fund stated that China would need to open its capital markets and allow full currency convertibility if it wants to challenge the US dollar. Despite the potential resistance, Allaire remains optimistic about the development of Web3 and stablecoin regulation in Hong Kong. He believes that for Hong Kong to stay relevant, it must embrace digital assets, as other major financial markets around the world are doing. Allaire suggests that a stablecoin pegged to the offshore yuan could facilitate increased use of the currency in global trade and commerce. However, the creators of that offshore yuan and Hong Kong dollar stablecoins were detained in May, indicating potential challenges. Allaire also commented on the role of stablecoins once CBDCs become more widely available. He believes that while central banks may upgrade their systems to more modern distributed ledger technology, the private sector's innovation on the public internet is a separate and crucial aspect. The Hong Kong Monetary Authority plans to introduce stablecoin regulations by 2024, and the Hong Kong government has recently set up a Web3 task force. Allaire expressed excitement about these developments, seeing, quote, enormous demand for digital dollars in the region. While the Chinese government's stance on stablecoins remains uncertain, the potential for their use in internationalizing the yuan is an intriguing prospect. The developments in Hong Kong also indicate a growing acceptance of digital assets in major financial markets. Finally, we're heading back to the US, but before we do, if you're finding this podcast informative, don't forget to like, follow, and subscribe. Now let's see what's happening with Promethium. U.S. Senator Thomas Tuberville and a group of Republican lawmakers have raised concerns about Promethium. Promethium is a special purpose broker that recently secured federal permissions to offer crypto trading services. They have written an open letter to Attorney General Merrick Garland and SEC Chair Gary Gensler, asking them to investigate the company. The lawmakers allege Promethium may have provided false testimony to Congress or violated U.S. securities laws. They claim that Prometheus' CEO, Aaron Kaplan, told Congress that the company developed its own blockchain platform independently starting in December 2019. However, in SEC filings, Promethium stated that it depended on Shanghai Wangxiang blockchain, notable because that is a Chinese firm alleged to have ties to the Chinese Communist Party. The lawmakers have asked why this was not made clear in Promethium's SEC filings. Now, Prometheus has denied these allegations, stating that the company did not misrepresent its relationship with Wangxiang. They clarified that the joint development of their blockchain trading system ended in early 2020 due to viability issues. They also stated that the formal end of joint development with the company and its affiliates was in October 2021. The company has faced criticism from the crypto industry, with many arguing that Promethium's proposed model for trading crypto assets as securities cannot work. The lawmakers' concerns about Promethium's ties to Wangxiang and its broker approval are rooted in potential threats to the data security and privacy of American investors. Kaplan has previously stated that while Zhang has a 20% stake in Promethium, it has no access to the firm's data and technology. He also mentioned that the SEC has investigated this relationship. However, the lawmakers remain skeptical about these claims and have requested a prompt investigation into the matter. They believe that if Promethium has made false statements to Congress or submitted misleading statements in SEC filings, it would constitute a crime and securities fraud. The lawmakers have not provided a deadline for a response to their request for an investigation. Their concerns and the subsequent investigation request highlight the ongoing tension between the crypto industry and regulatory bodies. It underscores the need for transparency and adherence to regulations in the rapidly evolving crypto space. The outcome of this investigation could have significant implications for Promethium and potentially set a precedent for other crypto companies in the future. So, what happened? We covered a wide range of stories tonight, each highlighting the dynamic and evolving world of cryptocurrencies. Our first tale was of Grayscale's legal battle with the SEC over the rejection of its application to convert the Grayscale Bitcoin Trust into a spot Bitcoin ETF. This move has sparked a debate about the SEC's inconsistent treatment of Bitcoin-based products. Our next story took us to Great Britain, where we discussed the UK's crackdown on crypto ATMs and its exploration of a 5-year trial for digital securities, highlighting the country's efforts to balance innovation with regulation. Our saga shifted to Dubai, where BitOasis's conditional license was suspended by Vera, underscoring the regulatory challenges faced by crypto exchanges and the importance of compliance. Our next story in Brazil taught us about the reverse engineering of the source code of the country's pilot CBDC. This has sparked a conversation about the potential benefits and concerns of a CBDC. We also heard from Circle's CEO Jeremy Allaire, who suggested that China should consider adopting stablecoins backed by the Chinese yuan to internationalize its currency, despite potential resistance from the Chinese government. And finally, we ended with the story of Promethium, a special-purpose broker facing scrutiny from U.S. lawmakers over potential violations of securities laws, highlighting the ongoing tension between the crypto industry and its regulators. And that's going to do it for us. I want to thank you, my listeners, because when you stop listening, I will stop talking. If you enjoyed tonight's show, then please like, follow, subscribe, leave a rating, or maybe a review. And in the meantime, we'll see you tomorrow night.